Swing trading for beginners. Let's dive. Swing trading for beginners. Let's dive step by step, overall a view with a real money, real account case study. So hopefully everybody is doing well. As usually we trade real money. I'm going to show you a real case studies we made swing trading on Amazon, making over $3,000 for the past 2 days. Today is only $2,500 that we made on Amazon. This is an Amazon today that is at $1,993.51. This is a trade that we started here. See this morning's screenshot. I have the cost basis of 1,918. So made almost 70 points on Amazon for the past 2 days. This is also a trade on Amazon that was on social media. So we'll go step by step. I have 10 steps to help you for swing trading for beginners. So step by step, let's go. Number one. So when you swing trade, step number one versus day trading is to understand the time frames, right? When you swing trade and you are looking at swing trading, especially if you are beginning, for us, swing trading is anything that you keep overnight. So you keep position overnight. So let's say you buy Amazon today, right? And you keep overnight, right? And you sell tomorrow. That's also a swing trade. Okay? That's a quick swing trade, but that qualifies for a swing trade. For me, swing trading is anything that you buy, keep overnight, and that are less than 365 days in duration, because you still are taxed as a short-term capital gain, right? Now, day trading in the opposite way would be you buy today and you sell today before the market close, right? Before 4:15 p.m., buy today, sell today, you are back in cash. Okay, so I'm going to show you in that swing trading for beginners step by step, my 10 steps here that I've learned with real money, real account for the past 23 years to help traders in the institutional side and the retail side, and see, hopefully it will help you. Now, as always, please, if you like our videos and support those videos with likes, it would be super appreciated, and comment on your experience of swing trading versus day trading. So when you day trade, you are in cash by 4 o'clock and you rinse and repeat. Next day you come and you have all the cash ready to start another day and trade in and out for the same day. Position trading, swing trading, guys, you hold those positions. So like for instance, here is a chart from 2009, from 2018 of our full Pro Tool. Blue dot is a 75% to 85% chance of a continuation of a trend. See, this is a beautiful chart. So when you swing trade, you look at longer time frame charts, a monthly chart, that's what we do, and a weekly chart. And for us, the monthly charts plus the weekly charts, that's what we call the main trend. So when you swing trade, essentially, and you have good support and resistance, you always swing trade within the main trend of the market, the monthlies and the weeklies. Whereas when I day trade, right, I use shorter time frame, a 4-hour chart, a daily chart, a 5-minute chart, and an hour chart, a 60-minute chart. And this is what we call an intermediary trend. So you see, when you day trade, you use the lower time frame. Versus swing trading, you're always staying within the predominant strength and trend of the market. So if you go here live in our full Pro Tool on Amazon, if I look for the past 10 years, see, I have an up arrow, that's my intermediary trend signal. I have the blue dot for 75 to 85% chance of success okay, a continuation of the trend, right? Above the power line, above the power line, above the power lines. Those are the important support and resistance, right? And this started in 2007 on Amazon. It's 2018, and look, in 2007 we were at about $80 a share on Amazon on the monthly charts, day trading zones full pro tour. So the bottom line is you got to understand when you are going to swing trade that you are going to use the longer time frame. Then I use a 60-minute chart, and I use our retail tools, our buy zone, caution zone, sell zone. So I go back here to the real account, real money trade case study, and I looked here on our buy zone, caution zone, and sell zone, and I'm looking, okay, I have a main trend that I was up on Amazon. What is the intermediary trend doing? And look what I've done. Here, since the past 2 days, since Tuesday, we started bottoming here at this 1920 area on Amazon. We were holding the power line, holding the power line, holding the power line, holding the power lines. You can use a moving average. You can use an exponential moving average. Those are powerful. Look here too. We use the MACDs, the 12, 26, 9 MACDs to give you a quick directional cross here on the MACDs. See, directional cross here on the pullback, directional cross here. And so they went to the bottom of our sell zone, and on the 60-minute chart we buy. And this is how I was able to get a cost basis of about 1918 to today I sold some at 1995. So over $70 profit on that swing trade, and that swing trade was a 2-3 days swing trades. Okay, and as I told you, it was well documented on our Facebook and our Instagram social media, and this is where you can see that besides those videos. So look this morning, the screenshot, it shows you perfectly here on this swing trades for beginners how I started 2 or 3 days ago, 56 shares at the 1920 area on our retail tools around this 1920, bought it. It was at 1970 this morning, see, August 29 at 11:05 a.m. and look now, live, right? Here, I'll go back to the account. Live, it's 1992. And you can see also that my runners, I got out of everything before doing this video. My last 20 shares running, I sold at 1995. So that was a very nice runner, which gave me over $3,000 because today was $2,500. But if you go on the social media like our Facebook group or our Instagram page, which is brand new, you will see here in the Facebook group on the 24 hours ago, see I posted my Amazon position, 81 shares. It was 1936 yesterday. So this is what we call a swing trade. You don't close it at 4:15. You keep it overnight. And this is where you got to understand rule number 1, swing trading versus position trading and day trading. Rule number 2, you want to understand the 7-20% rule. This is super important so that you have real expectations of growing your accounts and your wealth as a beginner swing trader, right? It's very important. So 7% is the minimum rate that I consider where my cash doesn't lose money. I consider the true rate of inflation to be around 7%. This is why Warren Buffett in all these books wants to beat the 7%, because below that you lose money every year. So let's say you leave $10,000 of your money in cash at the bank with no return, no ROI, you are going to lose 7% of your money every year. And let me show you, that would not be a pretty scene here if you were to do that. So look, if I have $10,000, I don't make any annual additions. I grow my money for 30 years on an interest rate that is negative 7%. Look what happened. Boom. Your money will go from 10,000 to 1,100 in 30 years. Do you see how you lose money? So you got to have a minimum return of 7%. And the 7-20 rule said Warren Buffett, one of the best investors of all time, has compounded over the past 40 years 20%. So your aim is to always shoot for that 20%, because that 20% compounded tax return over a period of 20 years can make you a multimillionaire and change your life. Look at this. If you put $5,500 into a Roth IRA and you make a $5,500 every year additional contribution for 20 years, and now it compounds tax-free at the 20% rate of return compounded from Warren Buffett, look what you have, $1.4 million. Alors, most of you are going to say, hey, where do I get stocks that compound 20%? Well, I have news for you. Amazon, for the past 12 years, right, has compounded 34% annually. So it beat Warren Buffett's rate of return by 14%. So those stocks exist. You need to do your homework. I will help you in other videos to give you my stocks of the month, my stock of the years, my position day trading stocks, my day trading stocks on social media, and the stuff that I use also to create Pyramid Wealth number 3, which is a wealth pyramid where we use tax efficiency, asset protection, and retirement accounts, to invest in real estate, the stock market, and create company and take ownership and be a partners in other companies by investing in ventures capital, seed into young venture capital growth projects. And a lot of that you can do with your trust and your retirement accounts. Rule number 3 of swing trading for beginners and be prepared in swing trading, you need to find a good broker account. I like those. Look, I don't make any commissions telling you that. There's no link in my bio yet. With this, I like Fidelity, Interactive Broker, TD Ameritrade. Robinhood, I'm very new at this. I was playing with it with my kids. If you are going to swing trade and you are new in the stock market, why don't you open a Robinhood account? Find another place where you can get charts. So a trick I gave you is you can open an account with $100 to $200 at TD Ameritrade, use the Thinkorswim platform, use their charts, use their analysis tools, and then you can place your trade on Robinhood commission free. That's a trick you can do that a lot of people that I know do that. Last but not least, you need rule number 4, understand technical charts and chart formation. It is important you understand double tops, real double tops. The first top, the second top needs to be higher than the first top. This is where they take your stop loss, then they go down, and understand that the middle part of double top is key. Double top, right? Double bottom, the same middle part, second bottom lower, head and shoulders, those, and inverse head and shoulders. Those are the chart formation that you'll see the most in trading. Understand trend, understand flag concept. So what is a flag? Let me show you a flag. So let's say you have an uptrend on Amazon here for the past 10 years. A flag would be something like this. We have an up flag, a downtrend flag, break up. Down flag, break up. Down flag, break up. See, you put a down flag, boom, it breaks up. 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 And down flag, break up. So down flag, break up into an uptrend, right? So down flag, break up into a downtrend. If you have an up flag into a downtrend. So if we had a downtrend, that goes like this, see? Lower high, lower low, so it goes up, back a little bit, boom, it crash again. Goes back a little bit, boom, crash again. That's an up flag that breaks down. Up flag that breaks down into a main trend, a stock that is downtrending. So always remember what we talked about earlier on. You need to always pinpoint your main trend with your weeklies and your monthly, your intermediary trends, so you don't counter trend with your daily 4-hour chart, 60-minute chart, 5-minute charts. This is why I have it all automated with institutions, for institutions and the retail trader for the past 16 years, whether it's our full pro tool or our basic tool for the retail traders, right? So very important that you create that for yourself using a cloud, using MACD, stochastic, moving average, volume profile, whatever is it that you are using, that you have good support, resistance, trend recognition, flag recognition, support and resistance mastery. So which leads us to number 6, you need to understand support and resistance very well. We have a playlist on YouTube with 3 big support and resistance video. They had over 25,000 views. I go deep on how you master support and resistance. That's what we do in the Day Trading Zones community when we create wealth and think wealth differently. Go into our playlist in the daytradingzones.com or Day Trading Zones, YouTube channel. Look for the playlist support and resistance, and you'll have 3 videos to master support and resistance, and read the tape in less than 5 minutes. It will be super helpful. Number 7, understand risk management on niche directional trades, even if it is a position trade or a swing trade and you are a beginner. Never risk more than 2% of your amount at risk. So let's say you invest a swing trade on Amazon. Again, I'm taking the 2000, and let's say it's at $2,000 even price, right? So you can buy 5 shares at 2K, that's 10K, right? And let's say you have 10K capital, and the rule says do not risk more than 2% of your capital. So in this case would be $200. So if you don't want to lose more than $200 with 5 shares, then you know that your stop loss should be 40 points. 40 points stop loss times 5 shares, you risk the $200. Okay, so it's a quick formula that I use. It's the amount at risk divided by the stop loss equals the numbers of shares. Okay, max shares. So from there you can do a rule of 3. Amount at risk 2% divided by the stop loss, right? So I'm going to put it here so that you see it's stop loss, right, equal the max shares. That's a quick, dirty formula that works very well. Rule number 8, understand fundamentals. When I do some of the video review, you'll see I like to go over the PE, the average PE for the past 5 years. Where do we stand in relationship to the average PE, revenue growth, income growth, margins, and cash positions. But most importantly, I'm a technical analyst type of person. I've done this for 23 years in hedge funds and prop firms, and I trade, invest, and position trade and swing trade, most importantly using technical analysis. Number 9, understand what the vehicle you are going to use. Are you going to swing trade with stocks, or are you going to swing trade with options, lips, or futures? Because look here, again, Amazon example, okay? Price is at 2000, very close today, right? Do you want to buy 1 share, right? 1 share? Or do you want to buy an option, which you control 100 shares? So look, if I go to the options pricing and I look, you want to do a swing trade. So let's say you go 142 days out on the January 19, so you have almost half of a year in your options, and you want to be in the money. Look how much they charge you. So for I like to go 70 delta to show you something that is deeper in the money, right? So here we're 65 delta, let's say. Well, look, you control 100 shares of Amazon here with $233, and you have 1 contract, and you have 100 shares, right? Whereas if you buy the shares, right, and you want to swing trade with shares, one share here is almost $2,000. So one share, $2,000 versus one contract, which is almost controlling 100 shares times 70 delta, let's say, so 70 shares, right? And you pay only $233, right? So very profound. I hope it is helpful that you understand all those concepts. Those 10 rules are 10 basic rules that goes a little deeper for you to start going trading and position trading and swing trading for success. And hopefully this is helpful. As always, if this was helpful, please support those videos with likes, comments, and if you are interested to know more about what we do and how we think wealth differently, we have webinars that starts every 15 minutes with a 14 days training video. This is absolutely free. It's well documented on the internet for the past 22 years. You can go below these videos, look for the trading challenge, and go into the trading challenge link below this video, and I'll see you on the other side of the trading challenge. You take care, everybody, and hope this video was helpful. Take care.